Good evening. Ira Epstein of Linn Associates with your financial market wrap-up. And this is for Tuesday, the 2nd of March, 2021, just getting on at 6 p.m. Central Time. I'm laughing because I've done this tape now 2 times and you're seeing the final version of it. And I'm laughing at myself as I saw certain things going on. I started questioning, where's my swing line? Did I do it wrong? I didn't do it wrong. But you start questioning yourself. I've been recording all day my enhanced course on Bollinger Bands using a slow stochastic. And I mean all day. I worked on it all weekend. So I'm far along. I'm throwing out chapters I did, putting new ones in already. So I'm getting far along on it. And I won't give an exact date. I was going to think it would this week. But where I'm at, probably might have to do a few things. If I don't do them over, it still could be. So I'm not going to corner myself. But what is going on in the market? Well, I still think that the stock indices are acting heavy right now. Heavy means they go up, they don't go anywhere. Now, we have to decide also what's going to happen this week. We have 2 big events yet to take place. We have on Thursday, Fed Chair Powell, and on Friday, we have the jobs data. Very important numbers coming out this week. I personally have taken the attitude the jobs data is not going to carry the weight you think it would. Why? I think the market, even if it's a bare number, just says, we got all these vaccines coming out. Now Merck's going to be making the Johnson & Johnson product. The president just said by May, every American that wants a vaccine can get it. What do I care what the jobless numbers are now? They're only going to get better as restaurants are reopening, bars, sporting events. People are going to go back to work in the service industry, and that's going to help. And that's the mentality I think is going to go to work. That doesn't mean you're not in a rotation in stocks. You have been. That does not mean the tech stocks that have been getting hit won't keep getting hit. I watched Zoom up 10% yesterday and down 15%, I think it was today. I laugh at it, but I get it. I get where the rotations are taking place. As I'm looking at the energies, it's all about OPEC this week. Thursday's when they meet. I'm still of the opinion there will be more oil put onto the market. Will it be OPEC that does it or just the Saudis because they've cut so much unilaterally? We'll find out how that's going to work. When I look at the S&P 500 index, I get married to always looking at first, I like to see where the market's at on a weekly chart of closes. What's the bias of the market? Well, it's been up, and it's been up since the October timeframe, right through here. Okay. Anytime you're over, at least this is my definition for bias, when you're over an 18-week average, an 18-day average, an 18-month average, whatever it is, I look at the bias. If you're over it, the bias is up on that chart. Under it, bias is down. It's a filter of other tools. I then look to see what the chart is doing. And I always start off with just what do I want to see there? Then I put on, in this sequence, believe it or not, I put on my swing line. I want to see what it's doing. The swing line is bearish. The trend is bearish. Why? If you define a downtrend as having lower highs, lower lows, which is what I do, you've got that. You have lower highs and you have lower lows on the apexes. Bearish. Second thing, I filter it. The market is under the 18-day moving average of closes. Bearish again. So what does it tell me? It tells me the bears are in control of the market until the market gets over 1912. I think they're sellers at the 18-day average like they did today. And now I think they're looking to see, can they get the market back down to the lower Bollinger Band to potentially take profit? Now, there is another set of numbers. They're called window envelopes. I only show those in my morning subscriber video, and that is a paid research video. It's very inexpensive, about $8 to give it a try, so don't tell me it's expensive, and that's for 26 videos in a month. But you get this, and that's where you're at. Take out 1912, and the trend would turn right back up on you on this formation. You'd have higher lows over that number, then 3957, basically a new all-time high, becomes your next resistance at the Bollinger Band. Why the Bollinger Band? Because 95% of the time the market will trade within it, which means the first times you hit it up or down, I'm expecting to see the professional money, and guys like me, maybe you don't think I'm a pro, you might, telling their clients, get out of Dodge. I then look at the momentum because I do believe momentum leads price in most cases. Is it always? You can get a piece of news out in a day the market wasn't expecting, and regardless of what momentum was trying to tell you, remember the word unexpected? Everything changes very quickly. But barring that, generally speaking, momentum will lead it. Momentum's not helping me here. You do see it just going flat. So, if it falls down, that's the support. If you get over 39.12, I take a different look at the market, and I think the pros are selling short. What about the Nasdaq? Well, I don't think the pros are going to defend the 18-day average. You'll say, why? The pattern is lower highs here and lower lows. If you take out right here this high, let me just show you this. That number of 1353.75. What would happen to the market, and I want to look at today's low too. Yeah, I'm right. That is the high you need. If you take it out, you then have a lower low and a higher high. Do you see how that would form? Not the same pattern. You also haven't taken out yesterday's low, which is necessary on my work to convince me that the apex, the new apex lower high, was Tuesday's number. In the Dow, we have a pattern of lower highs, lower lows, bearish. All the market did is go back to the 18-day average and sit there, and momentum has gone flat. What I have been telling my clientele in the morning, I started telling this, I think it was Friday or so, I said, I'm getting concerned that all we're going to do now is start spinning sideways, and it's exactly what is happening. The market's looking to consolidate. From the consolidation will be either a breakout to the upside or the downside. We're going to be waiting to see it, but you're prepping it for it. What about in the Russell? The Russell has no trend. You got a higher high and a lower low. That is not a sequence of a trend. What number has the market been stuck at for 2 weeks? You tell me. You should be able to see it. 18-day average. And as it sticks there, it's brought the Bollinger Bands flat and it's gotten momentum flat. So we're in a period of time where sideways in more stock indices than trending. When I watch every day the TV announcers who, it's a boring job for them. They got to talk the market up to keep you looking at it. I do not say that in a light manner. I'm saying it is a hard job. If you try to do what they're doing, there's few people that can do this for their 4-hour stints that they have to do it and make it interesting. Very difficult. And most are excellent at it. But when you look at it, you're just going sideways. So they'll say, oh, the market's down 200. It was up yesterday. Where's it going? And they're correct. They're making it interesting for you. In the VIX cash, all you did is pull back towards the 18-day average and you stopped the decline. Doesn't mean it can't go lower, but the trend is up. You ran into the Bollinger Band. Bye-bye. Remember what I said, first time you hit it, don't be a hero. You're generally backing off. Now, there's ways to keep partial positions. There's ways to liquidate all. That's what my enhanced course is going to show you, at least my concept of it. In the 20-year bond, I've got divergence. I have momentum trying to pick up. I have trends in a downtrend. I've got a bounce in the market. In order to negate the downtrend, but you can't start a new uptrend, you'd have to take out 161 and 2/32. But then you'd have to, in order to get bullish, get over this number. So the most I can see out of the market is a contra-trend rally since the bias is down up to that number. Right now, do I think the pros are jumping in? No, you're too oversold. I don't think they're selling short. What about the 10-year note? Same thing. When you lose an embedded reading, this is embedded. The market's just drifting sideways. When you lose it and you don't regain it back right away, often that's a prelude to price making a run for the closest moving average, in this case, the 18-day, and you can see that right here. That seems to be what it's trying to get done. Dollar index, you went from 4 days ago, the lower Bollinger Band to the upper. You think the pros aren't doing what I'm saying? You don't have to agree with me, but fight the chart. I'm just telling you what's going on. And did I tell my clientele that are paying me for this that if we go up, this is going to be powerful resistance? I did. So, they want me to be their eyes and ears. They'll decide what to do. But that's the purpose of the morning videos, because I'm showing you what I'm seeing coming up. How do you want to handle it? When I think it's a buy, I'll say that. When I think it's a sale, I'll say it. I don't see anything. I see a market that's just going back and forth here, staying out of a trend. It's the flip-flop in the euro. Down to the lower Bollinger Band and you cover. So you were at the upper band, now you go to the lower band and you're back. Want to get chopped apart? Trade that type of trade. And you know what that makes you do? Get you in the habit of, here, I'm going to come back to it, get you in the habit of saying, oh, I can pick a top, I can pick a bottom. It's setting you up for destruction. I'd rather in an uptrend buy the high, or have my clients, I'm going to say it the right word when I give them the advice, I'd rather have them buy the highest high of the day in an uptrend than buy the low. And you're going to say, why? Because I knew they were with the trend. If you're not in a trend, you say, I bought it here. Look at how good I did. Guys, I've been in this game since 69. I've owned my own firm since, 84 or something. You think I haven't seen all kinds of traders come and go. The ones that I've seen that succeed trade trends. End of discussion. British pound. The correction set itself in when you lost the embedded reading. That often leads right there. That's the beginning of it. If it doesn't re-embed, it often goes back to the 18-day average of closes where this market is gone, and now it has to restructure itself. That's what I'm looking for. Bitcoin. I thought the market would get down when it lost its embedded reading here to the 18-day average, and it has. The trend is down. Lower highs, lower lows. It's starting to be able to stay under the 18-day average, but at the same time, it's oversold. Do I think you're going to attract new selling in an oversold? You don't have to. I mean, oversold is a filter in itself. Then a lot of algorithms will go, nope, I don't want to do anything. And traders, an algorithm is just what you know in your head, and you're able to put it into a computer code. You do get that. I hope you do. So you got to figure out the formula. The computer doesn't wake up typically. I imagine there's some AI computers that can as we're really getting far along here. But for most of us, it's going to rely on what you put in it. In the Brent versus WTI crude, well, you're still with the Brent having the bigger bid than the WTI. As you can see, we lost, and I'm going to come back here because if this isn't worth you being a subscriber with me, even on this for free, to hit that subscribe button. You're looking at the market, you lose the embedded reading, if it doesn't gain 80 back the next day, the game's probably over. Market stays there, I'm looking for the 18-day average of closes. Bingo. Let's go to the next one. Same thing happened, WTI. You're there too. Let's go to the next one. Here's your embedded readings. You lose them. If you don't get it back the next day, I think you're going to hit that 18-day average. Bingo. You're fighting your battle there. And you don't have anything going on in nat gas. This is a market that's got a higher high, lower low. It's traveled from the upper band to the lower, respected the 100-day average. It's a nothing on my chart action. So, if you need help understanding the verbiage that I'm doing, our good friends at Modern Trader, Futures Magazine, same company, put together these guides to technical indicators, both volumes 1 and 2. I think that they're cool as can be. Why? Let's assume that you're trying to get a better understanding of stochastics, Bollinger Bands. It's going to be here with examples galore on them, giving you the basics. You can go on the internet, or you can come here and look at it where it's right in front of you in what I think is probably the neatest presentations of all. How do you get it? It's simple. By the way, when we send it to you, it's a link to a PDF so you can watch it right on your computer. You don't have to print it out, but if you want to, you can. Go to our website under free offers or give my staff a call. They do pick up the phone. We'll take care of you. I'm Ira Epstein. Have a great day.